Joining us now is Ken Kaniu. He's a senior investment manager at Stanlib Kenya. We are discussing the East African budget, which is a big story in this region, looking at some of those things that are coming in. We have huge budgets coming in, and we're looking at some of those numbers that we'll be unpacking with Ken Kaniu. Now, looking at the Kenyan budget, it is 1.7 trillion. How are we funding this budget?
Well, I think that's the question on everybody's lips, isn't it? And I think after 5 p.m., hopefully we'll have an answer. I think in terms of tax revenue, the KRA so far has been below target. They wanted to collect 850 billion shillings, and we know that by the end of the third quarter, they were down by 27 billion shillings. And we only have, I think it's 3 weeks to the end of this year's financial year. I think the first quarter of the year obviously was very challenging off the back of, we had the elections, we've had an environment of high interest rates. So I think in terms of economic productivity, we've been on the back foot for quite some time. But I think in terms of some of the measures that they want to do, they want to try to externalize some of the debt that we have. So in terms of the sovereign bond, we are hoping that the amount actually comes in at close to $2 billion. The volume will be good, and also from the point of view of the rate that they'll borrow at, it should be significantly cheaper than actually going to the local markets.
Okay.
We also know that they are trying to, for example, reintroduce the value-added tax bill. They're looking at various tax remissions in the financial sector to try and actually get more income. So I think with these sorts of things, coupled obviously with local borrowing, they should come close. Let me not say they'll meet their target, but they should come close to achieving what it is that they're trying to do. Cutting
across the board, we've seen all the budgets actually on an increase, because if you look at Kenya's current fiscal one, it's at 4.4, and now the next one is going to be 1.6. If you look at Tanzania, it's 17.7 trillion.
Right.
Uganda, we have 12 trillion shillings. Right. Rwanda, we have 1.6 trillion shillings.
Right.
Why are we seeing this increase over and over every single year, an increase in budget in terms of the total budget allocations?
I think what's happening is that the nature of government in many of the East African economies is actually changing. We've seen new constitutions come through and new structures of government come which need to be funded. And I think Kenya and Uganda really are a case in point. As well, we are seeing the recognition and acknowledgement that those economies have been going through structural bottlenecks from the point of view of transport, infrastructure, and now energy investments going forward. So all of these need to be funded. So I think over time, if you really put the thing on a graph, we're really going through an almost growth sort of phase. So you obviously need the revenue to actually match that expenditure, which is what I think a lot of these finance ministers and in effect governments are grappling with at the moment.
Mm-hmm. Let's look at Rwanda, which is one of the countries that actually issued a Eurobond that was oversubscribed, and they did well. Is it something that the other governments need to replicate? I know Kenya has been mentioning it for some time now, but we've not yet seen it. Is it something else that Uganda and Tanzania need to consider?
No, absolutely. The Rwandans raised $400 million US. I think the bond came out at a yield of close to 6%. And in Kenya and Tanzania, we've already seen that begin to happen. About a year and a half ago, Kenya issued a syndicated loan for $600 million. Tanzania has also put out a similar instrument, which is a tenor of 7 years. But I think from a Kenyan perspective, we need much more than the 400 that Rwanda actually borrowed, which is why we are hoping that the figure comes in at close to $2 billion, just to retire the 600 million that we have and then use the balance for capital and investment spend. So that is beginning to become a trend because obviously the domestic tax base is not widening at the same rate as obviously expenditure, and also secondly from the point of view of domestic debt to GDP, you don't want to obviously overstretch the government coffers from that perspective. So I think externalizing it is a trend that you should see come through, not just in East Africa, but really from many countries in sub-Saharan Africa.
I'm glad you've mentioned the issue of revenues, because if you look at the current fiscal year, which is ending in the next 17 days, we have Kenya's deficit sitting at 6% of GDP. That's about 300 billion shillings, a shortfall. And looking at the projection that we have for revenues, we have 1.3 trillion shillings. That's the projection that they have for revenues for this fiscal year. And in Tanzania, it's 10 trillion shillings. In Uganda, it's 8.5 trillion shillings. And in Rwanda, it's 15% of GDP, which is about 7.5 Rwandan franc. If you look at the disconnect that we're seeing, do we expect then this, the deficit to continue rising?
I think it will continue rising at least in the next 1 to 2 years. I think all three countries that you've mentioned have gone through an extended period of fiscal stimulus, from the point of view of deregulation, from the point of view of privatization of state-sponsored enterprises. That has been going on fairly well. But fiscal consolidation will have to start coming through possibly from 2015 going forwards, because really in terms of debt to GDP ratios, we're all sitting pretty low at 50%. But going beyond that, looking at 60 and 70, then that level will start to become fairly unsustainable. So I do feel that from 2015 going forward, fiscal consolidation will start to have come through, because borrowing from the domestic markets at that point could obviously spur inflation and interest rates. And from the point of view of externalizing your debt, there's only so much that really one can externalize.
Staying on that queue of inflation that you mentioned, Uganda is one of the highest in terms of inflation in the region.
Right.
And it is one of the very heavily dependent countries on donor funding.
Right.
And because of embezzlement, we saw the donor fund
Yes.
say that they're going to pull out of Uganda.
Yeah.
So then how does Uganda stand in terms of its budget, in terms of funding that budget? Where do they get the money to fund their budget?
Uganda is in a very difficult situation because that $260 million that was pulled away by donors actually accounts for 30% of government revenue. So from a fiscal standpoint, they're actually sitting in a fairly weak situation. Again, if you look at the revenues that have come through from the Uganda Revenue Authority, they've been fairly weak and below target. In fact, Uganda's ratio of tax revenue to GDP is at 12%, which is the lowest in East Africa, and really as well is only half of the sub-Saharan African average. So they are facing huge challenges. We know that they're very keen on, and we expect in the budget, various levies and remissions to come through from the point of view of communications, from the point of view of energy, so we expect them to raise money from there. And we also now are aware that they are considering non-concessionary borrowing as a way to actually plug that particular deficit. Obviously, if you look at global growth, it continues to be weak. The Eurozone crisis continues unabated, so that will be still fairly challenging. But I think for Uganda, the number one thing that they need to do is simply scale back on their expenditure, just as a way of actually keeping that deficit within check.
I'm glad you've mentioned the issue of expenditure, because if you look at the ratios between development budget and the recurrent budget, it is still biased towards the recurrent budget. In Kenya, for instance, let me read out for you. The recurrent is at 70 when we have the development at 30. Looking at Tanzania, it's at 65-45. That's a split. Rwanda seems to be doing better at 50-50 in terms of recurrent and development. Uganda is telling the same way as Kenya, which is 70-30. For you, when you look at these splits, what do you read into these numbers?
The numbers are not very good because in summary, we are spending 70% of our money paying people's wages and salaries. But I think, as I mentioned earlier, I think from the point of view of East Africa, and specifically Kenya, Uganda, and Tanzania, we are going through implementation of new structures of government, new constitutions have been implemented. So it's going to take some time, really, for the structures to actually take root. In Kenya, for example, it's going to take time for these counties to actually begin to generate significant amounts of revenues over and above the 15% that they'll get from the national government. And it's only at that point that you'll start to see really revenues begin to actually flow through and really the makeup of expenditure begin to change. I think we are all aware that from a development side, that is really where more priority should be focused on. Unfortunately, that tends to be the part of the budget which is financed either through donors, through non-concessionary borrowing and those sorts of things. But we are also very happy, especially from a Kenyan perspective, to see that the PPP framework has now been institutionalized, it's been finalized, and from the point of view of some of the very large infrastructure projects that they want to actually fund, then PPP will be called upon to actually make sure that these projects are delivered on time and reduce the actual cash flow burden from the government in terms of funding some of those projects.